If you like our content, please subscribe and like to support our channel. Hello traders, Gary Wagner here. It is 11:50 in Honolulu, 5:50 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 5th day of September 2025, and this is the evening report for gold and silver, our weekend review. Gold reaches a new record high as weak jobs data points to a September rate cut. Gold soared to unprecedented heights today following a disappointing jobs report that has all but guaranteed that the Federal Reserve will cut rates at this month's FOMC meeting. Today, the government released the August employment report, delivering another blow to an already weakening job market, with employers adding just 22,000 positions, far short of the 75,000 economists had forecast. This resulted in gold surging to its highest value in history, with December gold futures gaining $30.50, taking the most active contract to $3,639.80. Spot gold had a more significant gain of 1.15%, $40.67.5, taking a troy ounce to $3,586.54.5. Silver also did exceedingly well today, gaining 1.87%. That's a net increase of 76 cents, taking a troy ounce to $41.51. Gains in both gold and silver were greatly aided by dollar weakness. The dollar declined by 0.56%, taking the index to 97.744. As we spoke about on yesterday's show, once gold declined after a significant gain of 6 consecutive days of higher pricing, was if yesterday's decline was signaling a impending correction, or if we would witness what's called a one-off, a one and done, in which we saw a price decline, but gold would return to the prevalent trend direction, which is higher. We did get our answer, at least for today, which is it seems that yesterday's decline was a one-off, a simple round of profit taking. However, market sentiment remains too bullish for that to have led to a correction. We saw gold surge to its highest price ever, actually trading to an intraday high of approximately $3,654. And when we look at yesterday's $17 decline, but exaggerated low, that was a 23.6% Fibonacci correction of the entire rally, and is actually very, very shallow, but quite acceptable. In other words, I would expect gold to trade higher next week. The question becomes, how much could gold gain next week? To answer that question, what I've done is just a basic Fibonacci extension of this week's rise. First, I am assuming that this bullish trend will continue and will at least gain a portion of what was gained this week, with $100 gained last week, and as I said, about $123 this week. If gold moves 61.8% above the closing price of this week, that would take gold well above $3,700 to $37.17. If next week is equal to this week, which I believe might be less likely, gold would then trade to approximately $3,764, and a 1.236 extension would take gold under $7 shy of $3,800 per troy ounce. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.